Hi everyone, this is Ram Martinez, GFB Chair, and I'm here to talk to you about the entity dashboards for the financial statement summary category. So let's look at the composition. As you know, this is the composition of the dashboards. We're going to focus on the statement summary here. So there is the LCs, MC and entity, then there's the balance sheet. So it's basically two main financial statements, profit loss and balance sheets, and then it's just going to focus on summary. So just a recap. So basically, this was already mentioned in the previous slides before, but entity section only focuses on all of the categories of all of the totals of MC and LC, except for the internal revenues and cost part, because those two should counter itself out because the entity affiliation fee, which is a cost of the LC, would become a revenue of the MC. So if you're going to think about it, they should counteract each other. If there is a discrepancy that happened, then you should take a look into your accounting on this one, because that means the accounting for this accounts doesn't necessarily match. So you need to check with your entity. Similar application for balance sheet as well. There is cash, long-term assets, long-term and short-term receivables, and then liabilities and equity has equity, long-term and short-term liabilities. But for entity, they're all external. But for MC and LC, there are also internal accounts. These internal accounts is not counted in the entity already, because these internal would act as if they are receivable or liability just between the MC and the LCs, because LC can have a liability towards MC or vice versa, etc. So again, if there's a discrepancy, then you should take a look into some of the accounting. So why do we have this tab? Especially that we already had the historical tab. So this tab would act more of a summarized version of the historical tab. Plus this tab is basically has the graphs and the trends and also guide questions for you to be able to look into some of the other aspects of how the entity dashboards is going to operate. So summary, profit loss statement. So total profit loss comparison. So this part we're only going to focus on total profit loss. We already talked about the other type of profits, which is direct profit and sustainability on the previous slides. So just go to those slides. But for this one, we're going to talk about the total profit. So for example, this section of calculation is the monthly progress and cumulative results between 1920 executed, 1920 budgeted, and 1890 executed. So the 1819 and executed and 1920 budgeted are all available. Meanwhile, the 1920 executed will always operate and progress. So again, monthly and cumulative, similar application in terms of how they are calculated. Because this is total profit, so basically total revenue minus total cost, right? Yeah. Then total, this is a graph of how it would look like. So first graph is just the monthly, the second one is the cumulative. Then it would show how the monthly is basically going to show the profit and losses between different months. Meanwhile, cumulative is based on the progress since the start of that term, either 1818 or 1920, either executed or budgeted. Then financial performance, profit loss statement, analysis, and contribution. So since we had already divided them into different parts, into some categories, which is 4 categories for revenue, 5 categories for cost, so we can actually create a much simpler graphs as compared to the entire details. So profit loss summary is summarized with categories and cumulative results. So first part of calculation is revenue, second part is cost, third part is monthly and cumulative results in terms of what was resulted from the before. So if you're going to look at this, 60, the numbers here should be the same numbers as this one at the bottom here as well. Yeah. All right, and also this will apply 3 times for 1920 executed, 1920 budgeted, and 1819 budgeted. Then there will be an accompanying graph here, which is basically total revenue LC, total cost LC, total profit, and cumulative. So you can see how the progress of each revenue and cost would be related to each one another between monthly profit, cumulative profit. Yeah. So you can see how would be the relationship be in terms of totals. Then there's also another part here, which is monthly revenue and cost, which is based on per category. For revenue, there are 4 categories. Then for cost, there are 5 categories. So you can see easily visualize which one is big, which category is bigger, which one category is smaller. Yeah, for example, the first part, monthly revenue, majority of their contribution actually comes from exchange. Next is from conference, which is this yellow one. Then the cost, majority of the cost actually comes from this blue and orange one, which is exchange cost and others. And then there's also this yellow one, which is conference, mainly on the March. So you can see how the visualize each category is, how they contribute per for the totals and per month. Now all these content for profit loss would be applied to LCs and MC and entity. So summary. So for balance sheet now. So balance sheet analysis and contribution. So this one, the first section is basically shows the monthly balance sheet in summarized categories. So there are 4 categories for assets, 3 categories for liabilities. So if you can see here, we just split them on a different side so that it's a lot easier to be able to create the graphs basically. But if you're going to look, if asset is not equal to liabilities, then the difference would be called balance sum residual. This will show the amount that makes the balance sheet not balance. So yeah, so in case there is going to happen where assets is like 500 while liabilities is 400, then that means residual would be 100. Then this is a graph for monthly balance contribution, which is as well categorized in different categories. They are different categories of assets and liabilities. Ideally, per month, the asset categories and liabilities category would total to a same balance of bars. So that's why you can see in different months that has in different columns that has the same months. They are all balanced within the same level. So again, this all these content would be applied to LCs, MC, and entities, so I don't need to repeat them again. So yeah, that's pretty much it on the summary part. So the next slide would be financial indicators. So which are the months of reserves, core performance, liquidity, debt ratio, and conference. So again, see you again next time. Bye bye.